they trade liquidity. For them, they trade market structure, they trade imbalances, they trade price delivery. So for you, as you're looking for the support, now institutional traders are looking for liquidity. So as you're looking for the resistance, as you're looking for the price action, institutional traders are looking for market structure, and institutional traders are looking for imbalances, they are looking for fair value gaps. So they are looking for also the premium zones, they are looking for discount zones, when to enter and when not to enter. So stop blowing your money. Yeah, so if you master this model, the one I'm going to show you is going to help you. Okay, guys, it's going to improve your trading strategy. Please don't forget to subscribe, don't forget to share my YouTube videos. Okay, guys, so step by step. So the first step to master the ICT strategy concept is we are going to identify the buyers. Okay, guys, so we are going to identify the time frame. So we can also begin from the higher time frame. So we can see that we first identify the time frame you want to trade. Okay, so we can first check our buyers. So our buyers, we can see that now the weekly, we are going to see that our weekly is a bullish. Okay, guys, so we can see that the weekly is showing bullish. It's a bullish scenario. So we can go now to the daily time frame. So the daily time frame is also showing that it's a bullish scenario. So we can see that now at this point we are seeing that since the market is now bullish, so we are finished now. So in our mind, we know that the market is now a bullish market. So now we drop down in the 4-hour time frame. So what are we going to look for in the 4-hour time frame? So we as ICT trader, we as ICT trader, the first things first, after identifying the trend, now we have identified that it's a bullish trend. Okay, guys, so on all my last video, I showed you how you can identify the trend, and I showed you that's the first step for every beginner, or you can do. Okay, guys, so if you are an advanced trader, this video is for you. Or if you are not, if you are an expert trader, this video is for you. You can improve on your trading strategy. Okay, guys, so yeah. Now the first things first, so we are going to first identify now our liquidity. So in ICT model, we have the liquidity side. Okay, so we have different types of liquidity. We have the buy side liquidity, we have the sell side liquidity. Now in this point, I'm going to show you now, we are going to mark our liquidity. So our first liquidity, we are seeing that here we have a buy side liquidity. So at this point here, we have a sell side liquidity. So sorry, at this point up, we have a sell side liquidity. So at this point here, we have a sell side liquidity. So at this point we have a buy side liquidity. Okay, so sorry for the mistake. So at this point up here we have a buy side liquidity. So at this point here up here we are seeing that there is a buy side liquidity. Now down here we are seeing that there is a sell side liquidity. So here we have two types of liquidity. Now we are seeing a buy side liquidity and we are seeing a sell side liquidity. So at this point, after identifying liquidity, now we are going to identify the market structure. So what's the market structure doing? So we are seeing that the market structure has already shifted. So we in ICT we are seeing also we must look for the market structure shift. So what's the market structure shift? Now we are seeing that now the market has already caused a displacement. So in ICT we also look for the displacement. So what's the displacement? So we are seeing that there was a displacement in here. So what are we seeing here? We are seeing some sort of displacement around here. So there was a slight displacement in that zone. Okay, guys, so you can see now there was a slight displacement. Now you can see this was a displacement. So a displacement, or in other times we can see now the market has already shifted. So a displacement plus a change of character. So a displacement, we can also go in hand with the order block. So an order block, so sometimes if you want to identify the order block, so the order block can be identified by looking for the opposite candle, like 3 candles, but the other should be the opposite. But at this point, we are seeing a displacement. So this displacement, now when this displacement occurs, you don't enter directly in the market. So you have to wait. Now when the displacement occurs, we are going to see that there will be some sort of fair value gap which is being left. So there's a fair value gap here in this point. So at this point, we are going to see that there's a big gap which has been left. Now, a fair value gap will be left there. So for the premium traders to enter in. So price will come back in the replacement, in the premium replacement. So the rule says that we only wait for the 50% discount. So we are going to enter in the 50%. So you wait for the replacement, then you enter. So first, so the first things first. So we have already identified the buy. So we have already identified the buy side liquidity. So we have identified it. So the buy side liquidity, now I can change its color to orange. So the sell side liquidity, I can change its color now to green. Okay, guys, so we can see that now up here we are seeing a buy side liquidity. Now down here we are seeing a sell side liquidity. Now we can see now as we move on now. So first things first. So we also identify the market structure shift. Okay, guys. So market structure shift. So how can we identify the market structure shift? Now, before identifying the market structure shift, since the market is showing that it's an uptrend, so we are in a bullish market or we are in a bullish scenario, so we are most likely to look for more buyers in the market. So at our point now, we are seeing that now at this point there was liquidity here. So at this point we are seeing that there was some sort of liquidity here, liquidity trap. So we are seeing that liquidity was being tapped in around this zone here. So we are seeing that there was some sort of liquidity in that zone. So we are going to see that in this point here. So this is a sell side liquidity, sell side liquidity. So we are seeing some. So a sell side liquidity means that now most of the retail traders are placing their sell stops around here, or they are placing their stop losses around here. So most of the retail traders, for them, when they see the market is breaking, so they have already entered their sales. They think that the market is going to drop. But remember, at this point on your left, we are seeing that there was some sort of liquidity within this zone. So when the liquidity is being tapped in, so below this zone, so you don't sell below this zone. So and here we don't buy above the zone. So this zone we first wait for the liquidity to be tapped in. So there's the no, so now at this point we are seeing that there's liquidity pool which has been swept. So liquidity sweep has been happening. So now we are seeing that a sell side liquidity has been taken out. Okay, guys, so you wait for the liquidity to be taken out, then you enter the market. Okay, guys, so but when you enter blindly, so we are going to be stopped out. So we are going to see that when now these guys have been stopped out. Now at this point we are seeing that. So at first I told you that now this point. So at this point here we are seeing that this is, so this one is like a displacement. So here we are seeing that our liquidity has been taken out now. Our liquidity has been taken out. So our sell side liquidity has been taken out. Now we at some point here we are seeing that here there was a market structure shift. Okay, guys, so we are seeing that here there was a market structure shift. So at this point there was a market structure shift. Now at this point now we are going to see that here there was now so this line here is called a sell side liquidity. So this is a sell side liquidity. Now this line up here we are seeing that this is a buy side liquidity. So now we are going to see that now for us to enter we have to look at now the market, and we have to look for the market structure shift. So what's the market structure shift? So we are going to see that for us to confirm a market structure shift, we have to see an order block and we have to see a strong displacement. So a strong displacement sometimes occurs with a strong clean candle when the strong clean candle is breaking of the recent high. So we are going to see now here at some point here we are seeing another displacement which has just occurred around here. So a displacement has been occurred. So when a displacement occurs, so we are seeing that the market is now shifting to the upward. So we are seeing that there was also a market structure shift. So here liquidity has been taken out. Now here we are seeing that our value change of character has occurred also here. We are seeing that the market is now shifting, so causing now a displacement to the upward. So we are seeing that now the market has caused a strong displacement. So we are seeing that now our point now here, when the market now causes like that, so we are seeing that now here the market, when it causes whenever it causes a displacement, so it's going to leave a strong fair value gap. So a strong fair value gap supported with an order block. So we are seeing that now our order block, we are going to see that now there was some sort of order block here. So this is our order block. We are seeing now this is our order block. So our order block here, we are seeing that now our order block is around. So our order block here, you can see now our order block is around this zone. Okay, guys. So sorry for the interruption. So we are going to see that now our order block here, we are going to see that. So at this point now, we are going to see that now our order block was around here. So this is an order block. So as you can see, that was an order block here. So this is an order block, but there was some slight displacement within this zone. So this displacement here, which has been caused, so we are seeing that there was some sort of fair value gap. So in this point here, there was some fair value gap within this zone. So there was a fair value gap here. So we have to wait for the price to come and mitigate the remaining orders. So there was some pending orders here. So since the market is just moving now, so we are going to see that the market, since the market has caused the first displacement, caused plus the first displacement plus an order block. So this is a bullish order block plus a displacement plus a fair value gap. It's a bullish fair value gap. So we are seeing that now prices now shifted. The market was showing a market shift. So that this was the market shift. So now coming back in this zone, now tapping now, so tapping now, so tapping this zone. So the prices, when it came back, it tapped in that zone. Now when it tapped that zone, it left liquidity within this zone. So this liquidity has now happened now. So it left liquidity. So when this liquidity was left now, so it caused now a fake out. So this is now a liquidity sweep. Now when it left some liquidity here, so we are seeing now here, now it's forming a new market now shift. Okay guys, so now at this point now, so this was now after forming this structure. So we are seeing that now prices are more likely now to run. Now in our setup now, we are going to see that now our next target, we shall see that. So our next target, we shall find it out. We shall find it out that, so we shall only enter, since now here we are entering in an order block zone. So this order block zone has been mitigated. So our stop loss is going to be placed below this order block, below this structure. So because this is the zone which has been mitigated, so now this is a swing trade. Now our target is going to be around here. So it's going to be around this zone. So this is the first example. So this is, so in this point here, we are seeing that now. So this first case is the first example. So this is a bullish example first. So how you can catch trades using ICT concepts, but now you're looking for the buys. So the first things first, I told you, you first look for the overall trend, then you look for the buys. Now this is what we have got. So our setup, we are going to see that this setup, as we wait, we shall see after 2 to 3 days, we shall see that prices will come back within this zone. So at this point, we shall see some sort of the market rallying, coming in this zone. So leaving also some liquidity around. So there should be some sort of liquidity within that zone, because now this is a buy side liquidity. So this is a buy side liquidity. So here there was a sell side liquidity. So in this sell side liquidity, we saw that there was some sort of liquidity left there. So tapping back in the zone. Okay guys, so this was how it was formed. Okay guys, so now I'm going to give you another example of how you can catch up also the sales. Okay guys, so don't forget to subscribe on my YouTube channel. Now as we continue, don't forget, so I'm going to show you another example how can you catch up all the sales. So the sellers, we can see that now we are going to look for a clean example of how we can catch up the sales. So okay guys, just stay alert. You have to only be with a book and a pen. So we are going to first identify the trend. So as we identify the trend, so we are going to see that prices were in a downtrend. So we are going to see that at this point here, we are seeing that now at this point we are going to mark out our liquidity. So our liquidity, we are seeing that now we are going to mark out our buy side liquidity. So the buy side liquidity, we are seeing it is around here. So this is a buy side liquidity. So stops above. So we are seeing some sell side liquidity is around here, stops below. Okay guys, so this is sell side liquidity. So we are seeing it. It's a buy side liquidity. So this is sell side liquidity. So sell side liquidity, we can also change its color to that. So now after identifying that, this is it, our trend. So we are seeing also, this is also another example of, so at this point here, we are seeing a sell side liquidity. This is sell side liquidity. Okay guys, and this is a buy side. So this is a buy side liquidity. Okay guys, so as simple as that. So there's no need of complicating. So I think ICT strategy is the best. So you can also include it within your trading strategy, so such that you can modify all these things, or you can now improve on your trading journal. Now you can start now making money without now being a gambler. So there's a difference between a gambler and a trader. So Gambling, you just press buy and sell. But now a real trader is one who uses his strategy and is one who refines his trading strategy. Is one who refines. You have to have a trading journal. You have to do a lot of things. So trading is more than what you think. Okay, so now, first things first, let me take you through. So, after identifying the trend, so we are seeing that now the market was moving in an uptrend. So, we are going to identify also the market structure. So, the market structure on our left, we are seeing that it was a bullish market structure. So, the market was a bullish market structure. As we were seeing, the market was moving like that. So, this was a bullish market structure. Now, since the market was a bullish market structure, now we are waiting. Now, we are seeing that now here there was some that sort of liquidity around here. So this is also another kind of liquidity. Now, here's the bullish market structure. Now we only have to look for the buys. So how are we going to look for the buys? So we are going to look for the buys in our order block. So we are going to look for the order block. So this is our order block. So we shall first look for the order block. So our order block is around here. So this is our order block. So we identify the three candles. So these three candles, we are going to see that now. So in these three candles, we are seeing that now prices are so in this so this was our order block zone, this oblique zone. So we are seeing that now since prices were reacting very fast, so we are seeing that now there was a fair value gap which was being left back. Now at some point, so first things first. So when prices came back, so there was a bit sort of reaction. So prices reacted in this zone, tapping this into that zone. So now forming a market structure shift. As you're seeing, this was the market structure shift. MSS to the upside. Okay, yes, someone may call it MSS to the upside. So we can see it. This was the market structure shift. Now, when the market was shifting, so it formed a buy side liquidity. Now, when it formed the buy side liquidity, we can see. Okay, guys, so when forming the buy side liquidity, we can see now. So forming a buy side liquidity, now we shall say that now, since it is now from the buy side liquidity, what are we going to do? So it means that you are going to look now for more sales. So we are going to look for more sales. So how are we going to look for more sales? By combination of finding out change of market structure, then a BOS, then and an OB plus a fair value gap. So we are going to say that now here there was some sort of OB now, which was being left here. So we are seeing that here this was an OB zone. So we are seeing now we are seeing that was an OB zone. Now the change of market structure, we have to see it occurring. So we are seeing that. So how did the market change? The market first came here, so forming a new what? So when the market came back, so it formed a new lower high. So this is a new lower high. So this was a new lower high now. So it means that this is now a valid change of character now, change of shift. Okay, guys. So now our target, it means that we only target around the nearest sell side liquidity. Okay, guys. So your target will be also around the, so this is the sell side liquidity. So we only target around the liquidity zones. Okay, guys. So yeah, that is it. Now, but remember, since that was a short-term trade, so I'm going to show you. Remember, this is a bullish. We're in a bullish market, so we only look for the buy. So remember, when the market came back in an OB zone, okay, guys. So with the 50% retracement, so I have to tell you that. So we only wait for the market structure. So we only wait for the market structure. So you don't need to rush your entries. Okay, guys. So you don't need to rush your entry. Remember, there is internal liquidity and external liquidity. So remember here we are seeing some sort of internal liquidity around here. So we are seeing some. So this some sort of internal liquidity. So around here, this internal liquidity. So it is inside. Okay, guys. So that's inside. Now we are seeing that now since prices came back here, so we have to see that there should be a valid change, a valid choke, and there should be a valid breakout. Okay, guys. So now we are seeing that now prices moved. Okay, guys. So but an uptrend is not yet confirmed. So what are we going to see? Wait now. We first wait now for the price again to mitigate around this zone. Now we are seeing now mitigation coming in this zone. So tapping now back in an order block zone. So feeding now the fair value gap. So the fair value gap has been filled on your left. So when it's being filled on your left, so this one, so we are only now you only wait now for the displacement to occur. A displacement plus a clean market structure shift to the upside. Okay, guys. So the core ICT so the core ICT tools, we have a fair value gap, we have an order block, we have market structure. So in the market structure, we have BOS, we have CHoCH, we have. So I think those are the two things. So if there's no structure, you don't need to enter. So whenever there's no market structure, no need to trade. So you only close all the charts when there's no market structure. So but when you see that there's a market structure, when you see that there's a different the displacement. So displacement sometimes occurs when there's imbalance, and then when there's a strong market direction. Okay, so we are seeing that now at this point there was now a displacement. So a displacement occurred now around this zone. So when the displacement occurred to the upside, so we are seeing that the market now, so the market now left now some fair value gap. So the fair value gap is within the zone. So what did we need to do? So we only need for the price to retrace or tap in, then we enter. So we only put now our pending orders around this zone. So around this zone after the displacement, then also the market structure shift. So we only place our pending orders around this zone. So you will see that now your stop loss will be below around the order block. So this is an order block zone. So that's an order block zone. So we are going to see that though. So your target will always be around the buy side liquidity. So your target will also always be around the buy side liquidity. As simple as that. So another example I can show you here. We are seeing that there was a strong displacement. So this is a clean displacement. We are seeing it, a displacement. So prices moved rapidly. So after it tapping in, so we are going to see that. So whenever prices come back in this zone, so the markets will react off very strongly. So we are seeing that now the market reacted off very strong, then shifting to the upwards. Why? Because this zone is an OB zone. Okay, guys. So this is an OB zone. So it's a very big zone. It's an OB zone after the displacement occurred. So you only enter now. So you only enter after confirming. So you enter after confirming now. Yeah, after confirmation. So we are seeing that now. Then our nearest target around will also be now that's buy side liquidity. So your stop loss is going to be below this OB structure. Okay, guys. So this is a very good setup. Okay, guys. So yeah, a very good setup. And most of these setups, when they happen, so this, I think this strategy is the best. If you want to be a swing trader, you can also apply this strategy. So this strategy, it can help you to swing trade all your trades. I think you can see when the market left that zone, you can see up to this point. So you can swing trade all your trades. Okay, guys. So another example I'm going to show you the last example in a buy. So I'm going to show you the last example now. So at this point, as I've told you, we are going to first identify our liquidity, identify the market structure, identify the overall trend. So we are going to see that now. In this example, we are seeing some inside liquidity. So inside liquidity now, we are seeing that here there was a buy side liquidity here. So this is a buy side liquidity. So we are also seeing that at this point here, at this point. So at this point here, we are seeing some liquidity around here. This is a sell side. So this is a sell side liquidity. Yeah, this is a sell side liquidity. So we are seeing this is a sell side liquidity around there. So as you can see, so this is a sell side liquidity. So I can change its color to purple. So side liquidity is a buy side liquidity. So now we can see it very clear. Now you can see, yeah, market structure shift. Now, when the market leaves you, please don't chase the market. Just wait for your setup to happen. So now we are seeing now in this buy side liquidity, we are seeing some OB formation. And OB formation has been formed now. We are seeing our OB was very big. Now, accompanied by the displacement, now this OB zone was very big. You can see it. So the OB zone was very big. Now, what are we going to see now? We are going to see now. We have to wait for our setup to happen. So wait for the setup to happen. So what are we going to wait now? We are going to wait for the market structure shift. So the market structure shift, we have to see that now. In our OB, we have to see some sort of clean displacement. So there's a clean displacement. So when the displacement happened now to the upside, okay guys, so there was a displacement here, okay guys, displacement happened, okay guys, so that was, so a displacement happened, showing that the market is shifting to the upward. Now when the market will shift to the upwards, so if you want to swing trade now this trade, we only have now to wait, okay guys, so we have to wait for liquidity to be tapped in. So now there was some sort of liquidity sweep here, so liquidity sweep or liquidity pool. So most of the retail traders were around this zone and they were faked out, okay guys. So now never be like a retail trader. So most of the retail trader, they be in hope of making money, but most of the traders end up losing their money within their first 30 trading days, okay guys. So yeah, there was, as you can see this point, there is a big liquidity around here. So the sell side liquidity was faked out. So this is a fake out, here fake out. So we can see now around here, you can see this at this point, the market was reacting off this point. The market reacted off this point. Okay, guys. So after this point occurring, we only have to extrapolate. So after this point occurring, we only have to bring our ruler to enter. So our target will always be around there. So stop loss below the sell side liquidity. So we can see how the market reacted over and over again. So you will see that it took it a long time for the market to react until that zone. So you can see that it took it a lot of time for the market to hit that zone here. So you can see it. Okay, so that was a strong zone. So you can see it very clearly at this point. Okay, now at this point, I hope now in what you've learned now today, please, you can now start trading and making money using this ICT model. So in fact, I have just simplified this ICT model. You know, it's very hard, but I've only simplified because there are people out there who are struggling, who are looking for better strategies to make money. But now I've only simplified it. So I've simplified it in a way that whether you're a beginner, it can help you at this time, and you can trade the way I'm trading. Whether you are an expert looking for modernizing or looking for modifying it, you can also, it can also help you. Okay, so I think if you combine in with the strategy, so you are going to improve. So you will find that by the end of this year, or by starting of next year, you are going to see that there will be some changes in your trading then, and there will be some changes in your account. Okay, so don't forget to subscribe and don't forget to share all my YouTube videos. So as you can see, so today's lesson was just wonderful. So I've just shown you how ICT strategy works. So most people have been hearing it, how I've been hearing, but they don't know how it works. So as simple as that. So in summary, so ICT works in many things. So choke, you have to identify the choke, you have to identify the displacement.